Hi there folks, welcome to this week's weekly Forex Forecast, Monday the 24th of May. So last week we saw a bit of a decline in the US dollar. It actually hit 3-month lows against the single currency, the euro. Basically fueled by the fact that the bond yields were drifting low, although the FOMC, that's the Federal Open Market Committee minutes, did show that they were actually thinking about discussing about tapering of those bond buys, which really should support the dollar, although the dollar really didn't catch much of a bid on the back of it. So this is, as you know, my faithful momentum meter, or the currency strength meter. It basically tells me exactly what is going on in the currency markets. I don't know how anyone can trade the currency markets without using something like this. So as you can see here, this green line here, I've aptly coloured it green. That's the greenback. That is the US dollar. You can see the US dollar has been in decline last week. This is a weekly chart. And you see here, this blue line here, that is basically the euro. So the euro has been pushing on across the basket of currencies. We've also had a good round of data out of the Eurozone and in terms of the PMI, Purchasing Managers Index, like a forward-looking indicator, showing some really good potential there for growth. So the euro has been outperforming most of the currencies, coming from an area of weakness into an area of strength. The commodity currencies here, you'll see here, the orange and the New Zealand, these are still weaker currencies. Commodity currencies, basically these economies are heavily dependent on commodities. Commodities have been coming back a little bit, and these commodity currencies have been following. Also, we had some not such good news out of Australia in terms of job numbers, which is also weighing on the Australian dollar. And I think the feel in the markets is that the RBA are maybe going to be lagging behind their counterparts around the world in terms of their increasing rates, as their wage inflation and indeed inflation in general does seem to be quite subdued. Pound had a good week. Towards the end of the week, it started off lower, although the pound did have some really solid data out as well. Retail sales, inflation, really strong data out there. So that's basically the momentum meter. Let's have a quick look what we're looking at this week. We're looking at a potential long trade in the FTSE 100. The FTSE 100 has been a lovely trend. If you look at the higher time frame charts, we'll jump on the screen to look at it in a moment. But the 4-hour, the daily, nicely fanned out moving averages, all looking quite strong. Every pullback you see in the FTSE are seen to be met with a wave of buying. General stocks globally are looking reasonably strong, certainly not risk off at the moment. So pound, so the FTSE, we're likely to see maybe a momentum push higher as that gathers pace. Also looking at a pound against the US dollar short. Still expecting the bond yields to depress the US dollar this coming week. Certainly that's the way it's looking at the moment. Pound, as I say, a whole bunch of good data releases out of the UK as the lockdown basically is diminishing, and now everyone's getting back to work, businesses are opening up and so forth. So the pound is still looking very, very buoyant. Some really good PMIs out of the UK as well. So all looking reasonably good for the pound. Also looking here at pound against the Australian dollar. So this is my pick for the week. Now remember, these are not trade signals. You can't go off now and buy the pound or Aussie and expect to be banking profits by the end of the week. You should be using your own strategy. These are just my biases of what I think can happen. As I say, the Australian dollar is still under pressure this week, and that again could continue as the pound gets stronger. That currency pair should push up as well. We're looking at the next level of resistance up there around 84.50. And Max is looking at dollar against the NOK, continuing on with the US dollar softer theme. He's looking at basically buying the NOK against it with levels there up there at 8.20. Of course, oil prices as well should help the NOK. Right, what I'll do now is I'll jump onto the screen to have a look at some charts and see if there's anything that's standing out. Come on. Okay, so let's start off by having a quick look at the DXY. Now, the DXY is known as the dollar index. It's basically the US dollar pitched against 6 other main currencies. Now, the main component of that is the euro. Actually accounts for about 2/3 of the DXY, so the euro is the biggest player in there. That's why you'll often see the euro dollar look completely the mirror opposite of the DXY. Anyway, so this basically gauges the value of the US dollar. And you can see here we've been in a steady decline pretty much since the end of March. A few pullbacks along the way. Now we're actually at a 3-month low. If you look here, the last time we were down at these levels is around there, which came in around the 25th of February. So the dollar is on a 3-month low. Now this level is key. Of course, it's important. If we break down there, technical traders will be looking at the next level to the downside around the 89.20 level. So the dollar is under pressure at the moment. We are at the moment holding this 3-month low, but of course if it breaks, then that's where the eyes will be looking. And this is the US 10-year Treasury yield, basically interest rates. Now, as you know, the Fed control interest rates, but the bond markets give us clues on where the interest rates will be going. And normally speaking, where the interest rates go, the currency should follow. That's basically why we look at all these economic releases throughout the calendar month, to give us clues on where interest rates will be going. You see here we hit the high up there at around 1.77 at the end of March. You saw that on the dollar chart a moment ago, and since then we have been on a steady decline. Bouncing off this support zone around the 1.6 level. We're just poised above it at the moment, at the time of recording here on Monday morning. If bond yields want to break 161, you can expect the US dollar to continue under pressure for this week. That's basically what's driving this market lower at the moment. So all eyes will be on this key important level of 1.6 in the US yield. Let's have a quick look here at, I don't normally look at Bitcoin, but I'm going to talk about Bitcoin now for a moment. Because Bitcoin has been in a steady decline. Certainly there's lots of buzz talk about it in our trading room as well at the moment. So Bitcoin has really fallen right off a cliff since around the, about the same time really when dollar started to fall. I don't know if that's significant. But around the middle of April, the Bitcoin was up there at 64 or 65,000. We're now down there at 36,000, so almost halving of value. But again, this is a key level of support that we've got coming in to this crypto. So eyes will be on there. Now, technical traders are obviously clearly looking at Bitcoin as technical traders look at all charts, and this is the level that obviously has been respected as support. If this level gets broken, then of course the next support zone and markets, technical traders will be looking, I think, at the next support zone, which will be down there around the 20,000 level. But of course, you've got to trade your strategy, don't just trade a bias that you might hear me talk about. But that certainly are technical levels that the markets are looking at. Okay, let's finish off by having a quick look then at the economic calendar. Now, you should be always aware, if you're trading the Forex market, or indeed any market, you should always be aware of upcoming events, events that could basically move the markets, put some volatility in there and so forth. Now, you can get this economic calendar at our site. Just hit the description tab below, forexsignals.com, and scroll down to the bottom. You'll see economic calendar, and here it is. Okay, so basically the way to read this is down the right-hand side, you've got the impact. Anything that's red, coloured red, normally indicates high impact. Anything that's coloured green normally indicates low impact. And of course, if you're in doubt about what an economic release is, you can just click on it as well. It gives you a brief description on how it's likely to affect the markets should it deviate much from the expected. You've got the previous read down here on the right column, then you've got the estimate, and then you've got the actual as it is released. And the markets generally move when the actual deviates from the estimation. Okay, so not a lot at the first beginning of the week. We've got, I think the main thing we need to be focusing on really over the next few hours is the Bank of New Zealand, RBNZ. They're coming out with their rate statement. So that's basically 1 day from now, the 26th. It tells you the time as well. Not expected to move interest rates, you'll see here, but the follow-on statement, always important because it gives us clues onto what the central bank is thinking in terms of the outlook, the economic outlook. And of course, ultimately they are the ones that move interest rates. So eyes will be on that. If you're trading the Kiwi, if you're trading the New Zealand dollar, you need to make sure that you're aware of that. We've got nothing out really until midweek. We've got some data out of the US in terms of core personal consumption. We've got the gross domestic product as well. That's the GDP. Always looking at the GDP. Basically tells us the state of the economy. Again, if you're in doubt, just click on that little description and it will give you a description tab as well. So quite a light week in terms of economic releases. Not seeing very much at all until maybe we've got the OPEC meeting on the end of the week, which may be of interest. Again, if you're trading oil, you should be aware of OPEC meeting as well. But a light week in terms of economic releases. Keep an eye out for some central bank speakers. Bailey's talking a couple of times. That's the UK Bank of England governor. But apart from that, it is looking pretty light indeed. As I say, you can access this economic calendar over at the forexsignals.com or website at the bottom there. Okay, and there we go. Okay, so I hope you found that useful. Now, as you know, we are streaming live around the clock, 5 days a week, up to 6 times a day. If you want to come and join us, you can do so. Just to hit the description tab below, and it'll take you through to a 7-day free trial, I think, to join the trading room. If that's not your thing, and not a problem, I'll see you next week. In the meantime, have a good week.